Hey everyone, it's Daniel here from Infovest. Hope you're all doing well. So, if you've noticed and if you've been following, the bond market, especially the short end of the bonds, have been rallying these past couple of days because of all of these bank failures, right? Basically, pricing in that we're expected to see rate cuts very soon, and by 2024, we can see definitely about 100 basis points in rate cuts that would come in. Now, if you remember before the bank runs, and I talked about rates heading towards 6%. And I totally saw that happening as well. And especially if, and I especially as I said, that if nothing breaks, we can see rates continue to move up higher and wouldn't be surprised to see rates go to 6%. Now, obviously, that has the chances of that happening is probably low. Again, if nothing breaks and inflation continues to be hotter, then sure, then the Fed could inch rates higher to that 6% level if needed. But I think we're already starting to see the cracks, and I think the Fed is scared here now and doesn't want to exacerbate things and want to watch how things are playing out and may pause very much soon, as they mentioned in the FOMC meeting. Now, there were also hedge funds out there, a lot of hedge funds, and I don't know if you remember, I did a video on this, a lot of hedge funds that were betting and betting big that rates would get to 6%, especially this summer. Now, those hedge funds, right, that were expecting rates to go to 6%, and and shorting bonds expecting that, you could imagine with this blow up that we saw with the regional banks, you can imagine a lot of them had to cover their short positions, which is what created and exacerbated the yields to drop heavily, about 100 basis point plus, because of the short covering situation, right? Just like how a lot of banks and hedge funds didn't expect, pension funds didn't expect rates last year to go up to elevated levels and for central banks to be aggressive. And now you're seeing the effects of that. Guess what? You're now seeing the effects of other hedge funds who've bet that rates will continue to go deeper to 6% or above levels. And now those hedge funds are basically imploding. And we have yet to hear more about these stories. So there are some Bloomberg articles out there, and I'll link it in the description. But it says here, Breven Howard grounds a few traders after losses in a bond rout. The macro hedge fund firm grounded at least 3 traders. And this is because their loss limits have basically been hit. And they were the ones that were betting that rates would continue to increase. And they blame that the wild volatility in the bond market is what caused them to have some losses. Same thing, another hedge fund here, Hyder Macro Hedge Fund, plunges 32% in wild bond market moves, right? The Jupiter Fund returned a record of 193% last year, but the volatility basically ripped into the fund's returns, creating a lot of losses. So again, this is just the beginning. I wonder what other funds or banks are, betting. And banks shouldn't, by the way, banks shouldn't be doing this. They should be hedging in all terms of, in all volatility environments. No matter whether rates are going up or down, they should be hedged rather than trying to make a buck, right? But this is where you see where certain institutions, whether it's hedge funds, whether it's banks, whether it's shadow banking, where they come in, they try to make a buck or make a prediction and want to make money on the way down while bonds are selling off, and they end up on the wrong side of the trade and they end up blowing up, right? So we're seeing the cracks just like I was saying back in last year in 2022, the cracks are going to be shown for all these rate hikes that we're getting. And the same thing, the cracks are also going to be shown for this volatility in the bond market, in the bond volatility that we're seeing. The bond volatility index, if you check that out, that has skyrocketed and that has spiked. That definitely is a sign that a recession or something that's about to break is just around the corner, and it's starting to heat up. So let's continue to monitor this. Let me know what you guys think. Leave a comment below, subscribe, hit the like button and the bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.